$5,000, $10,000, $15,000, $20,000. How much should you save or use for your down payment? What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. And tonight we're going to go over down payment. How much should you save? How much should you use for the down payment when you buy your house? What's going on, guys? Also, this is our live stream. So if you have questions regarding anything with mortgage, please ask tonight. Also, if you haven't tuned into What's a Mortgage before, please hit the notification or subscribe button so you are notified every time we go live or post new content. We go live Mondays and Wednesdays at 9 p.m. and we post our content Sunday mornings and Wednesday mornings at 9 a.m. All right. So welcome to our channel, guys. It's been a crazy week so far, right? Today I came into the office. It's been crazy. Messenger has been insane. So I do apologize if we're not able to make it to everybody at a specific time frame. We are doing our best to bring in more people, to add more people to help you know what's a mortgage. So I do appreciate everyone who's been watching, everyone who's liked, shared, and everyone who's reached through and asked for help. So we're doing our best to help everybody. All right. So tonight, guys, we're going to help you understand down payment. One of the struggles people have all the time is, how do you know how much to save? How do you know how much you're going to use? How can you budget if you don't understand down payment? So tonight we are going to break down how to save the right down payment. We're going to use a down payment cheat sheet, and we're going to explain the different types of down payments you can have when purchasing a home. Okay? So, with down payment, let's get into a couple things here. Tonight we're going to go over the percentage. It's by percentage and not dollar amount. We're going to go over the down payment cheat sheet, and we're going to go over the different types of down payment. Okay? Then we're going to use a mortgage calculator for you to see, should you come in with a bigger down payment or not. That's the struggle most people have. Should I go 5% down or should I wait for 20% down? What's my cost of waiting? How long will it take for me to save that amount of money? All right. So let's talk about down payment, right? It's by percentage and not dollar amount. So if you are saving for your down payment, understand it's by percentage and not dollar amount. It's either going to be 3.5% down FHA or 5% down FHA. If you're going conventional, it's either going to be 3% down conventional, 5% down conventional, 10, 15, 20, or 25, depending on the program. Of course, with VA, it's 100% financing. The only time you don't go off percentage is when you are chasing a specific mortgage payment. Or if your debt to income ratio is way too high, then you would need to come in above your percentage. But typically when you're saving for your down payment, understand it's by percentage. If you understand that, now you know how much you need to save or how much you're going to use out of your checking savings or your 401k or your retirement for your down payment. Okay? So understand that it's by percentage. I think people, once you understand that, you'll understand how to save. Some of you guys may not be in a position to buy, but how much should you save? But remember, when you're saving, one thing everyone forgets, especially everyone who's telling people to buy 20% down, you need to factor in inflation. When you decide what program you're going to kind of go with, then you need to start saving. Okay, is it going to be 5% down or 3.5% down? As you're saying, oh, wait, I want a cheaper payment. Let me put 20% down or 15% down, right? Well, once you figure out the percentage, how long does it take for you to get that money? And is it worth it? Remember, when you're saving money for a down payment, you need to factor in your inflation. That's one thing I see most people forget. They do not factor in inflation. So by the time they have their 10% or their 20%, they wonder why are prices so high? Man, that payment is so high. I could have made that payment 2-3 years ago when I could have bought with less money. And we're going to go over that. Okay, guys? So remember, when you're saving for your down payment, it's by percentage, okay? Hopefully now you understand a clear path to save for home ownership. Here's our debt to income. No, here's our down payment cheat sheet, okay? Check out our down payment cheat sheet. So if you're trying to decide how much you need to save, here's our down payment cheat sheet. If you want a copy of this cheat sheet, you can go ahead and go to whatsamortgage.com and download our ultimate mortgage guide. Once you download our ultimate mortgage guide, it has other tips in there as well besides this down payment cheat sheet. So look at here, right? Let's say you want to go with the house of 500,000. Do you have the $15,000 now, or are you trying to save the 20% down, which is $100,000? If you are, how long will it take you to save that, right? A lot of people you talk to, you want 20% down. How long will it take for you to save 20% down? How long will it take for you to save 15% down or 5% down, right? What you want to do is look at what you have and match it up to the purchase price. So once you decide, I have X amount of dollars, let's say you have $20,000, right? You can go to our down payment cheat sheet. You can say with $20,000, of course, I can go 3% down up to 550, or I can go 3.5% down FHA down to 575, or I can go 400,000 5% down. Okay. Once you decide what you have in the bank, match it up to the percentage, right? Go to where you're looking for a purchase price. All right, go to any website that have properties, right? Redfin, Zillow, go anywhere where you see purchase price. Once you see the purchase price, match it up, right? It might not be exact, but now you can see, okay, what can I get for 500,000? What can I save to buy now? Or what do I need now to buy that 500,000, right? Do I have the 15,000? Do I have the 1750? Do I have the 25,000, the 50,000, or the 100,000? Maybe some of you guys are buying 700,000. Do you have the 22,400 right now? Or are you trying to save the 140,000, right? Now you have perspective that it's by percentage and you can save. Okay? So it's important for you to know that. Now we know that it's by percentage and not dollar amount. Now with the DTI, I keep saying that because we use the DTI cheat sheet all the time. But now with the down payment cheat sheet, you can sit there and find out what's realistic for you. What's realistic for you now? What's realistic for you next year and the year after? If some of you guys are waiting too long to buy, all right, you want to save 20% down. Let's say you have 60 grand, but 20% down is 120. How long will it take for you to save that extra $60,000, right? And we're going to go through it into a mortgage calculator to see is it worth it or not. Okay, so now we know it's by percentage, not dollar amount. We know the DTI cheat sheet is. The next step is, where are you going to draw your down payment? What sources can you use for your down payment? Okay, we have your liquid accounts, checking, savings, stocks, bonds, CDs. Also, if you sell anything that is liquid, if you sell jewelry, furniture, electronics, anything you sell, and you have a bill of sale that you sold it, you can use it for your down payment. Okay, so the money doesn't need to sit there for 2 months like everyone says. They do validate everything that's been in the bank account for the last 2 months, but you can sell something and use that money. For example, you sold today a Rolex, right? You sold it for 8 grand, right? They're going to want to see the bill of sale from the pawn shop if they pay you cash. If they give you a check, the bill of sale better match the check when you deposit it, okay? So we're going to go over that when we go over everything you need to know about down payment part 2. But part 1, just know that checking account, savings account, stocks, bonds, CDs, anything that you can sell, right, that belongs to you. And there's a bill of sale, right? And they can look it up and it has to make sense. Let's say you sold a Pokemon card, right? Did you guys hear the news? I think Jake Paul, one of the Logan brothers on YouTube, bought a Pokemon, I think Charmander card for $3 million. It was fake. But think about the person who sold it to them, right? You can sell it. They can look up how much that Charmander card is worth, right? You could use that money instantaneously. You don't have to source it. But you have to show proof that it was your card, you sold it, here's the bill of sale, and you use that money towards your down payment and closing costs, right? The next one, your your retirement, your IRAs, your 401k, your 403b, but you cannot use your 457. Someone asked me that today, right? It is incorrect on here. It's not because of deferred interest. It's not because the 457 is deferred interest. It's called deferred comp. Your 457, some of you guys who have it, is towards your pension. You cannot use your pension money towards your down payment and closing costs to buy. Yes, you can use it for if you have to use it for emergency circumstances, but they will not let you use the money towards your down payment and closing costs. I've had so many people who try to ask, they will not let you use it because it is called deferred comp. It is for your pension. Your 401k, your 403b, your IRA, you can draw from it for your down payment and closing costs when buying a home. Okay. The third type of asset, equity. Okay. If you have a home, you can sell it to buy your new home. If you have a home that you're buying that has equity, that a family member might be gifting you the equity, you can use that towards your down payment and closing costs. And last but not least, down payment assistance. Okay. So if you're buying a home and you're using down payment assistance, that is a source of down payment. All right. Now that we understand liquid, checking, savings, stocks, bonds, CDs, anything that you can sell, that is yours. That you have proof of the bill, proof that you sell it, a bill of sale, and when you deposit, it needs to match the bill. You can use that money. You can use your retirement, your IRA, your 401k, your 403b. You can't use your 457 because of your deferred comp, not deferred interest, deferred comp. And also, you can use your equity, right? You can sell and upgrade. You can sell and downgrade, right? Or if you're buying a house that has equity, it has to be from a family member. You can't go out there and buy a house from a friend, a neighbor that has equity and they can gift you the equity. The gift of equity has to come from a family member. And last but not least, down payment assistance. That is a source of down payment. But let me break down the different types of down payment assistance you can use to buy a home. Okay? You can use down payment assistance as a either gift or a grant, right? There's a third way too. They call it equity sharing, right? Which is not money gifted, so I just call it equity sharing. But typically, it's going to be either in a gift form or a grant. When you're doing down payment assistance as a grant, the money is given to you and it's forgiven. Typically, it'll be forgiven in X amount of years, or it'll be forgiven right away, depending on your occupation. Fireman, police officer, teacher, if you're in a first responder, right, in the medical field, right, they will give you grants and that money for down payment closing costs, and that money is forgiven, right? If it's not forgiven right away, it's given to you as a grant where it might be forgiven in a couple years, right? The other source of down payment assistance is a loan. So they can loan you the money for the down payment and the closing costs. Well, take a why would anyone take a loan when they can get a grant or a gift, right? Sometimes down payment systems with loans have cheaper mortgage payments than ones with grants and gifts. Okay, a lot of times with these grants and these gifts, the rates are kind of high, right? Because they're going to forgive you that money instantaneously or in a couple years. They got to make up their money somehow. So the interest rates on those loans are typically higher than the ones with loans on it. All right, but you can use either or programs for your down payment or closing costs when purchasing a home. Every state has their own down payment assistance. Every city has its own down payment assistance. There's a nationwide down payment assistance program called Chinoya as well, right? Not that popular with a lot of lenders because rates are kind of high on it, okay? But there are a lot of great programs out there. So when you're buying a home, remember, you might want to look into options. You might want to look into either a gift, a grant, or a loan, or come out of pocket with your checking account, your liquid account, your retirement account, or your equity. Whatever it is, just remember, it's by percentage and not dollar amount. Pull up the down payment cheat sheet one more time. Right? So looking at this down payment cheat sheet, depending on your purchase price, right? So find an area you're looking to purchase in. One of the questions I talk about all the time is find an area that you're looking to purchase in. Find out what the purchase price is in that area. Then match it up towards entry level down payment. 100% financing, typically you'll still come out of pocket 2% towards down payment and closing costs, right? Or is it going to be 3% down, 3.5% down, 5% down, 10%? Well, what should I pick? Well, what I would do is pick the minimal out of pocket in that for that specific purchase price and then run the numbers. Once you run the numbers, you can see, hey, is this payment affordable? If it's not, I either need to drop the purchase price or bring in a bigger down payment, right? We talked about that in how to lower your DTI, right? Lowering your payment. So once you see that purchase price, say, I have X amount, cool. I'm happy with X amount purchase price. Should I go with a minimal down payment or should I go with a higher down payment because I want a lower mortgage payment, right? So decide that once you know the area you're looking to purchase in, find out what the purchase price is, then match it up to percentage and make sure your liquid, your retirement, or your equity or your down payment assistance can, can provide you what you need to get that house. Okay, so that's how you decide your down payment, right? That's part one of everything you need to know about down payment. Percentage, down payment cheat sheet, which you can download in our What's a Mortgage Guide, our ultimate mortgage guide, right? At what'samortgage.com. Also, we talked about the cheat sheet. We talked about the different types of down payments you can use for buying a home. Now let's look at the mortgage calculator, okay? If you guys haven't yet, go to Techie Lender Calculator, right? I use this calculator habitually. Why is that? Because I'm telling you, I Googled calculator after calculator, and I have not found one calculator that holds up to this Techie Lender, right? Most of the calculators that I see out there, they're missing something to give you an accurate number. And of course, you are the one making the payment, not your realtor, not your lender, right? So you want to know what are the payments with that specific down payment so you can decide, hey, should I buy this house with this down payment or should I save? If I save, right, how long will it take for me to save that money? And if I save, what will it be at that time I buy? 2 years from now, 3 years from now. There isn't a calculator out there, right? So we decide, thank you, James William, right? The Techie Lender, he put together this calculator, right? And it helped us as loan officers and helps realtors, and it'll help you consumers know, hey, should I go with a bigger down payment or should I not? All right, here we go. 740 credit score, conventional. The reason why I use conventional more than FHA, because conventional, the down payment does change a lot of things, right? It changes the PMI. If you want to keep it as FHA, that's fine, okay? But we're going to do conventional here. So $500,000, right? Today, if I want to buy a $500,000 house, let's start with 5% down. Let's say we do a rate of 2.75. 5% down is $25,000, right? A lot of us can buy the house with the $25,000. A lot of you guys have the $25,000, but you're still saving, right? Should you save 10% down? The best thing you can do, Vanessa, run the numbers, right? 10% down. So you got to ask yourself, if I buy with 5% down with my 740 score, I already put the PMI in here for us on this one, right? The payment is $2,688. Okay, so if you go 5% down on 500 grand, right, it's $25,000. You have to decide: do I have the money right now to buy $25,000? My payment will be $2,688. Okay, or do I want to save for the 10% down? Let's listen to Vanessa, right? Let's go 10% down. So if we did 10, remember, 2688, right? Let's go this to 10% down. 10% down. If we go down to PMI, on 10% down, the PMI is going to be 0.29. So it's 0.38 right here, minus the 0.09 is 0.29. So if we go here to 0.29, the payment is going to be $25.29. The other payment was $26.88. So it's about $150 more. So you have to decide, do I have the $25,000 right now, right? Or do I want to save for that extra 10% down? If I save the extra 10% down, how long will it take for me to save it, right? Let's say you can save $1,000 a month. It would take you 2 years, right, to save 25 grand. Or you have that money now. And that's one thing I see a lot of people run into is they don't realize, okay, let me save that extra 10% to save $150 a month. But you have to remember, right? If you bought a home in, let's say 2 years, right? 2 years, let's change this back to 5%. And that's why I love this calculator right here. Let's say if you bought a home, right? In 2 years, the value of the home is $540. The total value is $540 in 2 years. So if you bought the home in 2 years, right? Because you saved your 10%, the extra 5% down, your purchase price would be $540. It wouldn't be $500. To save 25 grand, but your home went up your home went up value 40 grand, right? So you have to decide, do you want to pay 540 for the house, 10% down, or you want to buy the house 500,000, 5% down? Only you would know that, right? Of course, if you have the 10% and you have a bunch of money laying around, fine. If you can buy at the same time, you can buy 5% down, fine. But a lot of us, right, money does not grow on trees. And some of us, we need to save for the bigger down payment. And that's why it's so important for you to understand down payment and percentage, because now you know, hey, should you chase that bigger down payment, right? 540, okay? So we go 540. Check this out. We go 540 for purchase price. You have to save, right? $4,000 more. On 500,000, you have to save, right? You have for 500,000, 10% was 50,000. At 540, it's 54,000. That's another $4,000. I can do that, bro. Remember, it's not just 2 years, right? You would have to save 2 years, and 2 years would be 24 months, right? You would have to save 2 years and 5 months. So you would have to save that long for a home, okay? And let's say now you do 10% down. Look at this payment. 10% down. $2,731, right? 10% down. You waited. Check that out. You guys see this? I want you guys to see this. 540,000, right? 540,000. 10% down. 10% down. Your monthly mortgage payment is $2,731. So some of you guys out there who have your 5% down, you're waiting to save 10% down. You have to save $1,000 a month for 2 years. You know how hard it is to save $1,000 a month for 2 years? You're paying your rent. You're saving $1,000 more for 2 years to pay $2,731. Instead of buying that house for $500,000 at $25,000 down, you gotta tie up, right? Instead of $25,000, you gotta tie up $30,000 more to spend more. But the only way for you to know is to know your down payment. Know your down payment and run the numbers, okay? Remember that, $2,731. Some of you guys write that down. $2,731, okay? I'm here. Let's go back down to $500,000 purchase price, right? Dang, Andy, I didn't even know that. On trying to save that extra money, it wouldn't even help. 500,000, 5% down. .42. 2688. That's crazy, dude. I'm just mind blown myself right now. Did you see that, Andy? Dude, so you're busting your butt to save the 10% down when you're in 2 years when your payment's cheaper. Of course, if you can buy 5% down and 10% down at the same time, of course 10% down will be cheaper. But if you have your 5%, but you're chasing that 10%, right? It's gonna take you 2 years or 3 years. You're actually gonna spend more. You guys see that? And you're gonna miss out on all that equity, right? You gotta come in with an extra $30,000 instead of gaining 40 grand in equity, buying it right now with 5% down. You guys see the difference? All right, guys, so that's why I really want you guys to understand how down payment works, right? Everything with down payment is by percentage and not dollar amount. Some of you guys, look at the area you're looking to purchase your home and match it up to the percentage at 3% down, 3.5% down, 5% down, 10% down. And of course, you have the money, run the numbers. The payment might make sense for you. I bought 10% down, but I was in a position to buy 10% down or 5% down at the same time. If I had to save for that 20% down, I might not have bought it right away, but it might have been more expensive. Like I said, a couple years ago, the house on the same street, on the same model that was selling for $715, 2 years later sold for $780. Min, it can't be like this forever. Prices are bound to go down. If prices go down, I'm competing with cash buyers as well, right? Do you have that money for that cash to deal with those cash buyers? If values do go down, which I don't see, right? We'll know in March when a third of all the mortgage loans and mortgage forbearance are gonna go into foreclosure or notice of default or not. All right, guys, let's go some Q&A here. If you have questions, please bring them up. You need me to break it down more for you because I know I talk a little fast, give us a call. Call us or text us or email us, all right, guys? Jonathan Quilno, why do you have to prove where you get the money if you suddenly get a large deposit to make sure it came in from a legal source? The reason why you have to prove where you got the money, they're trying to protect the market from crashing again. They don't want a bunch of investors out there using straw buyers, which means they're using people with owner-occupied profiles with good credit to buy property for them. When you buy owner-occupied, you're only putting either 3% down, 3.5% down, sometimes 100% financing, right? When you buy investment, you have to put 20 to 25% down. So a lot of investors were using straw buyers back in the 07, 08 era, right? So during that time, because of all these straw buyers, when the market turned, right, since they came in with such little out of pocket, they let all these homes go into foreclosure. That's why they are not letting people buy with straw buyers. That's why they validate all your assets to make sure you're the real buyer. Hopefully that helps you out. Ali Grahada, how does it affect changing careers a couple months prior to purchasing a home? If you change careers, but in the same industry, you just have to wait 30 days and you can buy, as long as you didn't go from salary to commission. If you went from salary to commission, you got to wait 2 years. But if you change industries and you change positions at the same time and careers, you're going to have to wait a full 2 years. Hopefully that helps you out. Alejandra Nito, I know you said that you could potentially tie in closing costs into your loan. Is there a way to do partial closing costs into the loan and pay for the rest out of pocket? The answer is yes. Here's a couple ways you can do it. You can ask the seller to increase the purchase price and ask them to give you some of that money back for closing costs if the home appraises and the seller agrees, right? Or if the seller doesn't agree, you can increase the interest rate for the lender to help you with closing costs, and you can come out of pocket with the other portion of the closing costs. Hopefully that helps you out. Good question from Ryan Doe. Are lenders still accepting job offer letters for mortgages, or will I need a 30-day pay stub as well? After COVID-19, lenders want not just an offer letter, they will underwrite the loan with the offer letter, but they will not fund the loan until you have 30 days worth of pay stub. Hopefully that helps you out. Rodolfo, if you're a first-time buyer and want to buy a duplex, how does that impact down payment? If you're a first-time home buyer, first you can't do down payment assistance. So Chenoya, that program you can, but the regular down payment assistance you cannot do if you're going to come out of pocket, right? And if you buy a duplex, you go conventional, you have to put 15% down. If you buy FHA, you can put 3.5% down still. All right, hopefully that helps you out. Trish the Fish, do new home builders typically cover closing costs if using their preferred lender? Is there a catch such as a higher rate? So here's a secret. When you buy new construction, they factored in the closing cost into the purchase price. So if you use their preferred lender, you're going to be able to access that money towards your closing costs. If you don't, they just keep the money, but they've already factored it in, okay? Sometimes they do have to sell you a higher rate to give it to you, right? But you can tell by shopping the loan. But typically, you should get the lowest rate still because you're not increasing the rate to cover closing costs because they've already put it into the purchase price. Hopefully that helps you out. Gretchen, can I work side job, nanny, etc., getting paid small amount for cash and making deposits to save account weekly to use over your down payment? So of course you can't use a job as income, but if you put the money in the account, as long as you don't put money in there for 2 months, they don't source that cash, okay? They're gonna look at your last 2 months bank statements. As long as the beginning balance of those 2 months says that you have enough money. For example, if the down payment and closing cost was $20,000 and your beginning balance of your last 2 months says $20,000 without additional deposits, they're not going to ask you to source anything. Okay? But if your balances don't have that amount and they see all these deposits to give you the amount for your down payment and closing costs, then you have to source it. Hopefully that helps you out. All right, Joy Garcia, De Leon, Min, we are offering $600,000 for a home and it appraised at $555,000. Now we can't decide how much is the down. So if the home appraises at $600,000 and the purchase price was $550,000, if the offer was $600,000 and the home appraised at $555,000, you would have to come in with $45,000 for the rest of the down payment. And let's say you were doing 10% down, you would have to come in with $55,000 for the down payment and then $45,000 for the difference that the home didn't appraise. Hopefully that helps you out. All right, guys, I really appreciate all 51 of you guys on Facebook and the 39 people on YouTube. Thank you guys so much. I appreciate everyone who watched, who liked, and who shared. If you are buying a home with somebody, right, and they're not watching with you, tag them on this video, okay? I really appreciate it. It does help our algorithm. That's one thing you guys can do for me to help me out. So thank you guys so much. I appreciate all you guys. Participate, ask as many questions you can. We want to end all our live stream with our attitude is gratitude. Without you, there would be no us. So thank you guys so much. And remember, subscribe, all right? This Wednesday, don't forget, it's going to be everything you need to know about down payment. Part 2, right? All the strategies, different game plans, okay? We're going to go over that on Wednesday, 9 p.m., Facebook and YouTube. Have a great night. Again, thank you so much for watching our show. If you have any challenges or concerns regarding what's a mortgage, call me 714-332-2526.